Hi everyone. Last week the crypto market seemed a lot more promising, but then the tariff issues popped up again along with Trump's fascination with Greenland. We'll chat about all that in the next few minutes. Anyway, it pulled Bitcoin back into range after hopes for a breakout. We'll cover that, highlight key milestones, and discuss what's next and the current risks in the crypto and broader markets. And of course, I'll be doing this with Oliver Michel. Great to have you here, Oliver.
Hi.
I can usually tell how the market's doing just by the look on your face when you walk into the exchange, regardless of whether you've slept well or been up all night watching the charts. Today, you didn't look as excited as last week. We just heard that Donald Trump is eager to own Greenland, to buy it, even though it's not up for sale. If he doesn't get his way, he threatens tariffs. This, of course, drags us back to the same old market pressure. Do you think this issue will blow over quickly or will it linger?
Well, Johanna, you know they say on the stock market that political markets have short legs. And that means political factors might disappear or balance out in the medium to long term, but unfortunately not in the short term. So we're in this mess right now and have to deal with it. We'll have to watch how this Greenland tariff threat shakes out in the prices of our cryptos and in the performance of our US indices over the next days and weeks.
Let's check out the Fed Watch tool. It appears to be a bit stuck, at least when it comes to expectations for interest rate cuts in the near future. Last week, there were a few economic data points like CPI and PPI data, but they didn't really shake up the Fed Watch tool. Let's dive a bit deeper into those, please.
Yeah, like you mentioned, the key word is momentum. It was very minimal, barely noticeable. We had the CPI and PPI data, that is the consumer price index and the producer price index. How do you buy? How do you sell? You'll notice with the CPI. We had a previous figure of 2.7, an expected 2.7, and it came out as 2.7. As for the core figure, it's similar. That means things are stagnant, which isn't necessarily bad. Rising would be bad, falling would be better. But overall, it's the same story with the PPI, even though it's slightly up. Yeah, people accepted it, but it didn't mean much to the market. Truflation's statement got a bit more attention. They announced yesterday that inflation was measured at 1.57 and even 1.55 on January 16th. So this inflation, which can be compared to the CPI, is noticeably lower. This week, we're also getting the third component alongside CPI, PPI, which is the PCE value the Fed monitors. And then we've got inflation thoroughly covered in one go once again.
But what the data definitely shows is that Jerome Powell's claim that Donald Trump's tariffs are driving up inflation and stopping him from cutting interest rates doesn't hold up. At least not according to these inflation reports. You mentioned it earlier. We're still waiting for the PCE data this week. This week, we also got positive GDP numbers from the US. For the first look at last year's third quarter, it was 4.3%. Do you think there might be changes or risks in the second reading?
We'll see. I don't have a crystal ball. 4.3 was a real jump from the previous quarter's 3.8. That got quite a bit of celebration too. It'd be great if that holds, but it'd be a shame if it drops. We'll take it as it comes. And as you mentioned, with a few months of US tariff policy in the rear view, the Fed has kept saying those tariffs are pushing inflation. But if you look at the numbers over the past weeks and months, it doesn't really back that up.
From tariffs to inflation. When inflation drops, consumers feel good at first because prices aren't rising as fast. But it's a double-edged sword. Inflation could come back and maybe interest rates will be cut. but both have their dangers. What are they?
Yeah, these are always those misunderstandings. We've already clarified this in detail for interest rate cuts before. When interest rate cuts are announced, people think, oh, that's awesome because money will be cheap and you can get loans for less. But why is it done? Why? It's because the economy is struggling and they're trying to boost it with cheaper money. Another thing we've talked about is this misunderstanding about inflation. People say, oh, inflation is dropping, consumer prices are down. It's another seemingly great story, but you need to really look at the background. Dropping inflation isn't necessarily good, and most times it really isn't. I'll keep it short. The economy's weakening. That's the starting point. Wages are under pressure and dropping. People are fighting to keep their jobs, maybe going part-time. Savings are dwindling, meaning consumers have less money to spend. We've been highlighting this for weeks and months, breaking down various aspects. Ultimately, it all hinges on consumers. No spending means the economy's wheel doesn't turn. Less spending means less demand. And what happens then? Companies and sellers are stuck with their goods, so they have to lower prices or offer discounts, leading to possibly fewer price hikes. And this price change comes after the real issue, a weakening economy. Why? Companies might hesitate on cutting prices right away. And, for example, wages don't drop as fast as sales, so they wait a moment. For example, wages don't drop as fast as sales, so costs can't be slashed as quickly as sales might prompt on this basis. And you've got the issue of long-term contracts. So if you've got a long-term lease or sales contract, you can't just drop the prices. But with a delay, you will see them decrease. Prices are dropping, which ties into what we're talking about. Inflation. So when we spot today's low inflation rates, like Truflation's 1.55%, that low rate actually signals a slowdown. Prices fall right when the economy's been fragile. This is something we've been pointing out for years, explained theoretically a year ago, and now it's happening practically. So when everyone celebrates low inflation and falling rates, it's really a warning. It admits our economy is weak, and that's going to hit us eventually.
Still, Donald Trump would love lower or continuously falling interest rates. He'd also love to buy Greenland. But can you even buy a country that's not up for sale? We can't really answer that, but Trump's usual tactic, let's call it leverage, is familiar to us. Tariffs. He's planning a 10% tariff on all goods from 8 EU countries starting February 1st, with Germany on the list. If he doesn't get Greenland, he'll up it to 25% by June 1st. You just said we have to get through this, and of course prices will react. We'll also need to handle it with the coins. But still, even if we get through, the question is how much Trump can use this tool globally without causing long-term harm.
Yeah, that depends on what you mean by damage. So anyone not currently affected by damage from the new US customs policy is basically the US government itself. If you look here, I've named it the US government's most powerful tool right now. And The blue line shows the customs revenue for the year 24 when both administrations were still in power. The top line shows customs revenue during Trump's first year. You can see it starts at 79 billion using European notation and goes up to 264 billion by 2025. That's tripling in his first year. If his tariff policy succeeds, this trend will likely continue and significantly grow over the coming years. So it's a big deal for him, using tariffs as leverage on other countries, with the idea that if you want to do business with us, treat us fairly. We raise tariffs, you raise tariffs, it all needs to balance out somehow. Naturally, he's pushing foreign companies to produce in the US with the approach that if you don't want to pay tariffs, then just come here. That's the leverage he's using outwardly, and the tariff revenues, which are really huge compared to last year. And this is really the record year. So we're not talking about just any great year, but the most successful in recent memory year for US tariff revenue. And that is das. That's quite a big deal, which you're using positively, but it could also come back to bite him if he's unlucky.
Sure, on the inside, he's doing everything to win the midterms, which we're heading towards. And like you just said, it carries risks because you need to have the right to spend what you're spending. If the tariffs aren't legal, the Supreme Court will decide. We've mentioned several times on our show that most polymarket users think he'll do really well in the midterms. We'll have to bleed. And if he gets the tariffs ruled unlawful, he's got a serious problem. That's one issue that could be troublesome. But there's more. Let's look at this slide to see what's choking the US government right now. The Supreme Court is on our agenda today, possibly.
Yeah, you're right, Joanna. What's on this slide will decide on W and luck. That's just how it is. Starting in the US and then spreading worldwide. So like you mentioned, it's about tariffs. It's a powerful tool and it's essential for him. If this tool is taken away, he'll lose the financial foundation for many projects. Then he won't be able to deliver on his promises to the US consumers, and it will be clear that the midterms will be lost in the House and both houses of Congress, even the Senate, leaving him stuck in a final term that's powerless, only living the life of a toothless tiger. Yes, the Supreme Court's next session is today, so it's an especially interesting day. The US indices and their futures are already reflecting this, with the Nasdaq almost 2% down. The DXY has dropped 0.6 this morning, way more than what we'll see on the slide shortly. Everyone is on high alert. The Supreme Court has sessions where decisions are announced. Decisions aren't disclosed beforehand. They just say decisions will come today. Today might include a decision on the illegality of these tariffs. If not, we'll have to wait for the next session, just as we've had to twice before, since it could have been decided last Friday. So regarding these tariffs, there's two main things. If the tariffs go through, his whole setup, his entire financing product setup will collapse, and a decision could happen today. Like I mentioned, he appointed 3 out of 9 Supreme Court judges himself. That's probably a good foundation, but as you said, the odds aren't great. At the betting shops, personally, I'm hoping he pulls it off, because if not, we're in big trouble.
Do you think he'll get the tariffs legally approved?
If he pulls that off, I can definitely see a big jump coming, basically a serious upward trend, because then he'll have the financial base, can act freely, stimulate, and at least for our cryptos, keep pushing forward. So today's decision, possibly at the Supreme Court. Let's stay tuned. On the US markets opening today, we need to take a stance on the current customs threats regarding Greenland.
Sure, it would be great for Trump if he could get the tariffs through, but for the rest of the world trading with the US, it's another story.
And now nobody's really complained much, so I haven't heard anyone say otherwise. In the end, an agreement is always reached. And the US perspective and market are what matter to us. We're being totally selfish here. We just saw this. So yeah, things are really picking up in terms of their earnings.
Let's dive into the next tricky topic, the Clarity Act, which hasn't passed Congress yet. It did make it through the House last summer. Now, I'm not saying there are roadblocks being thrown, but we see Coinbase isn't on board with stablecoin interest rates, which isn't all that shocking. But assuming Trump pushes through with the tariffs, do you still see the Clarity Act stumbling?
Not really. It's more about what's actually in the Clarity Act and if it shows up in time. Because if he doesn't get the Clarity Act through, meaning the structuring of the crypto market, he's going to lose the crypto community. Because I think they might have given him the essential boost in the last US presidential election, possibly pushing him over the finish line. If he doesn't pull this off in time, it's all going to fall apart, and so will that goal. Like you said, it passed the House of Representatives last year. Congress is split into 2 houses, the House and the Senate. It moved on to the Senate. There were 137 comments on this document, and it was supposed to be reviewed in a markup meeting on the 15th last week. But that meeting got postponed for an important reason, which you mentioned earlier. Coinbase stated that given how the document looks with these markup sessions and comments, they can't back it. That was just Coinbase's take. Other companies like Ripple would prefer a slimmed down Clarity Act over nothing. So Coinbase is standing alone there. But I don't want to bash Coinbase. It's about the issue. Part of it was the banking lobby trying to cut stablecoin interest out of the Clarity Act.
Yeah.
When, for instance, Coinbase or other platforms offer stablecoins with 3, 4, 5% interest, while regular banks offer just a fraction on fiat money, it's obvious that the average consumer will pull their money from traditional banks and shift it into stablecoins, into the crypto world. Traditional banks wanted to stop this because it's a major part of their business, which they wanted to keep secure with the help of the banking lobby. Now, they're looking for a way to ensure both banks and crypto companies can benefit from these interest rates. A new markup meeting is set for January 27th. It's scheduled and a document will be discussed. The key info is that this document will definitely be available before the markup meeting. For the market to read through, and January 27th is next week. So this document will be released this week. If it's accepted, the Clarity Act doesn't need final Senate approval just yet. Essentially, if this is the text that's anticipated to pass, and we can trust it will as is, it's a strong sign the Clarity Act will roll out just as the crypto community hopes. That would obviously give the market a boost. So, we've got two things happening today. There's another development that could shake things up in our market today or later this week.
To put it simply, US banks are still doing well, especially since the US financial reporting season has just kicked off. They've performed pretty decently so far. But as you mentioned, if other investments become more appealing, it could really hit the banking sector. Plus, under Jerome Powell, the Federal Reserve remains very passive about cutting interest rates. Regardless of the fact that there will be a new Fed chair next year, the combo of a passive Fed and banks backing the central bank is still a risky mix.
Yes, I actually think that's the biggest risk. You need to understand, and we've talked about this a lot, the moment blockchain and crypto start shaking up the traditional financial market disruptively, we've discussed that people are moving their fiat money into stable coins and earning 3 to 5% interest. There's also the transfer fees to consider. So when this new tech takes off, banks will lose a ton of business. They're trying to prevent this from happening by stopping it from moving to the crypto world or slowing crypto down until they catch up with their own services. So the banking world has a strong lobby, and it's important to know they back the regional Feds. The Fed operates independently from the US government and functions as a hybrid entity. Part of this is that 2,000 banks in the US are involved with the 12 regional Feds, influencing policy. This means banks are currently the biggest blockers of the crypto market's growth. They want to keep their core businesses, so they support the Fed. It's no wonder the Fed pursues restrictive policies, especially when it comes to someone like Donald Trump trying to boost things with low rates. Plus, Trump accused Paul, unofficially of course, now he's suing JP Morgan, the largest US bank, which cut ties with him after the Capitol riot on January 6th. So, from that angle, it's not just that banks are the crypto world's biggest foes, they're also Trump's biggest adversaries. Or the other way around, Trump made the banking world his top enemy. And naturally, this means they're making his life difficult in every aspect, especially with his aim to win the midterms. In every aspect. We have to deal with that, as you said. They're putting a wrench in the works. That's just how it goes. But that's totally fair, because naturally they also want to...
You're my business guy.
Survive.
We were just talking about the economic reports that aren't ready yet, delayed because of the last shutdown, the longest in US history. So the impact of that shutdown hasn't fully healed, and we're already approaching another deadline since the budget was only agreed upon until January 30th of this year. If we can't find common ground or agree, are we looking at another shutdown by month's end?
Yeah, that's how it is. Remember, in the last days, things went downhill, flatline downhill, and the stopgap budget is only good until January 30th. If there's no new deal by then,
there's another shutdown coming.
Trump's not just dealing with all this, but he's also got the Democrats. Then there's another one. And what that means is, if another month-long shutdown happens before the midterms in November, there's not much time left. There's little time to fix everything. If he pulls it off, that is, gets the tariffs approved, passes the Clarity Act, and maybe the Fed, like you said about the new Fed chair, acts more government-friendly, pumping more money into the market and perhaps adjusting interest rates and avoids a shutdown. So if all that happens, if it goes smoothly, he's got a good shot at pushing his plans through. Like I said, we should be selfish here as crypto investors. Trump is the one who boosted the crypto market during his presidency, and hopefully he'll keep that up. He's heavily invested in this with his family, and really, everyone stands to gain from that.
There are still tons of ifs.
Yes, there are a lot of ifs, and if just 2 or 3 of those ifs go differently, then it's game over. You have to understand that, meaning when it's over, we'll be facing a crypto winter.
The Russell is currently benefiting when looking at the US indices. Today, we're focusing on the Russell, leaving the other 3 major indices aside. The Russell is doing well, which is a good sign. When investors see the Russell rising, it indicates increasing interest in riskier, smaller investments. You've mentioned that the Russell reaching all-time highs is now peaking, and it looks like there's still room to grow.
Yeah, hopefully not yet. It can still climb a few hundred points. Like you said, the Russell is finally where we want it, consistently hitting all-time highs. Just last week, it set records 4 out of 5 days. We've had these 2 green arrows forever, and it's now filled in the second one nicely. The red candle represents today, Tuesday, and the one before is Monday. The Russell is traded continuously. Yesterday was Martin Luther King Day, so no trading in the US, but the Russell still logged points. Of course, the Russell is a bit affected by today's developments. And we're in a wait-and-see mode, but we're seeing great upward movement as we hoped. The cool part is, Johanna, as you mentioned, we're not focusing on the S&P, Dow, and NASDAQ today because S&P and Dow hit all-time highs last Tuesday, but then started moving sideways while this kept going up. For me, that's a sign that liquidity might be moving from safer traditional stocks to riskier assets like our cryptos count. The fact that we've been expecting this upward trend is a key indicator. The Russell has to make it, which I see as a positive sign for our crypto development, and they need to step up and keep pace.
We regularly follow the dollar's movement in our show using the DXY, which measures the dollar against major world currencies. With the current noise from the US government, it's no surprise the dollar is weakening. So as we've seen, silver and gold are rising, safe havens. None of this is new, but when the dollar weakens, it's a good sign for crypto.
Yeah, totally, because the dollar as an investment product
gains appeal.
When something loses its allure, that allure has to find a new home, and it can head toward our cryptos. We've been noticing this since At this point, it needs to drop. That's the aim. We got halfway there before it bounced back, and checking out the DXY this morning, written at 6:08, a lot has happened. This right red candle has dropped to 98.5. The route down to our target is clear. If the inverse relationship between DXY and Bitcoin kicks in, with DXY down, Bitcoin up, and vice versa, there's a chance our cryptos will rise if it falls again. This is a solid indicator we've been following, showing that conditions are favorable. The signs point to a potential rise in Bitcoin. I'm still optimistic.
That's right. You never know who will ask a question. You can't predict all of mine. Last Tuesday, we talked about a possible breakout. Bitcoin went up nicely, but with Greenland, tariffs, and all that, it just slipped back into the range after a taste of freedom. Is it time for the next breakout, or should we expect Bitcoin to take a breather before making any moves, considering what's coming up this week?
Yeah, the last thing you mentioned is probably the case. So we've been in this downtrend, and this is the next higher low compared to the last one, keeping continuity. We've moved sideways into the range and have been in it for 2 months. We were here last week saying it would be great if it broke through on the 4th try, and it did. It moved out of the range upwards. Then it smartly came back to test the upper range, which was once resistance as support, but then, as we mentioned at the start, political news hit, shaking the markets, causing things to drop back into the range. We're now at 91,000, just before the interview. So we dipped a bit further down, and the upper gap we talked about before got filled. The lower gap between 88 and 88.8 is now actually relative to 91, and that is the dotted red line, not that far away. If it closes, that's fine by me. I wouldn't mind, since all CME gaps have been filled in the last 9 months. Why shouldn't this one close too? Now we just have to wait and see what today. This week will bring in every way. We've gone over it a lot. It's a super interesting and pivotal week. Even when things might look good for us, it could still dip again, like I mentioned in the last interview, and start from there. We'll have to wait and see. On the way up, Johanna, it's clear that he needs to break through the range. That's the first goal. Here we've got the SMA 50 on the weekly chart. That's the next hurdle to clear. Then it moves on to 608, 722, 786. And once it's past those, it's open season for new all-time highs. But you can see it's quite a stretch from 91 to 126, and there are plenty of targets along the way. He needs to tackle. He has a lot of goals on the way up, and he needs to work on them week by week. Just like we've been saying week after week.
Let's move away from chart analysis and shift to fundamental news, because combining the two gives a bit more clarity overall. Was there any news or developments about Bitcoin last week that could impact it?
The fundamental influences as indicators are noted here in the first line. Rate cuts make money cheap, which opens up investment opportunities, including in these assets. Liquidity gets pumped into the market. The Fed prints money and circulates it, making it accessible. The US indices pave the way. If they're not heading up, neither are our cryptos. Particularly, the Russell we mentioned earlier and the DXY are direct indicators. Whatever info came out about wallets, holding 10,000 Bitcoins, I think they're called shark whales.
Fish to shark.
Fish to Shark has bought or gathered more Bitcoins in the past 30 days than since the FTX crash. Bigger investors, private investors, and smaller institutional investors are hopping back on the train too. Last week showed this with a $1.42 billion inflow into the spot Bitcoin ETF. Still, we'll skip the weekly and monthly charts today because there's nothing new. The weekly chart is positive, showing the upward trend is still on, with higher highs and lows. For the monthly chart, the MACD is still in the red, no change there. So we have two totally opposite indicators. One's bullish, the other's bearish. We just have to wait and see how it all unfolds. To know if we're going up or down, will we have a relief rally to the SMA 50 and then drop? Or will the trend continue to new all-time highs? The indicators I'm keeping an eye on mostly point up. But as I mentioned, other indicators suggest 50 might be the top. And yet others think it won't even break past this range and might drop right away. These are interesting times. Everyone has their indicators and beliefs on how it might end up. And we'll find out in the next few weeks. Who's right?
Bitcoin has dropped back into the range. How are the altcoins doing? What about ETH and XRP? Did they keep their support?
Yeah, well, they've also taken a hit, understandably so with this news. You can see here, that was the green candle when Bitcoin broke out to the upside, and then it went back down in the following days. You can see that the 3,450 mark, the dotted line, is definitely a resistance. But there's also upward movement. Now we have to watch this closely. Is this the way up? It's possible, but it hinges on Bitcoin. If Bitcoin takes the lead, then an ES can follow, and when it does, it should move with enough speed and performance to kick off the altcoin season. The Spot East ETF had 5 good days, with 5 inflows totaling $500 million. Interestingly, 30% of the ES available are staked, meaning they're locked and not for sale, and keeping supply low. Low supply with increasing demand leads to rising prices. That's what we're expecting. But in the end, Johanna, we're still in a 2-year range. If you're interested, check out the older videos. It's been over 2 years. Swinging between 4 and 2,000 US dollars. And now we're at 3,000 right in the middle, fighting for that psychological 3,000 mark, and I'm curious to see how this plays out in the coming days.
Let's take another look at XRP. We've dropped below $2 now. Does that worry you?
Not right now, because we've always said we have a range between $2 and $3, and you can see it's dipped below that. The range has been on the far left for over a year. And yes, during this wick, it dropped too. I think it went down to about 186, 184. It bounced back, but is slowly dipping again. I think it's around 192 now. As long as we're between 2 and 180 down here in this buffer zone, around the range, I'm not concerned yet, because I stand by the statement that if XRP makes a big move up, it comes from the lower part of the range, not the middle or top, but from the lower. That's where it's heading, just like the last breakouts. And that's basically why I believe in this whole downward move. That it'll find its footing here and start climbing. But at the end of the day, Johanna, it all comes down to belief. How are the US indices doing? They're tied to the overall economic situation. How are the US indices doing? How is the Russell doing? How is Bitcoin doing? And then they come into play It's the third or fourth stage in the whole chain. If the ones before don't hit, this won't hit either. So if Bitcoin, if it falls, they won't go up, so forget about it. Back to the whole Clarity Act squabble. I was just talking about it, the back and forth between Coinbase, the banks, and the US government, who weren't thrilled with what Coinbase did. This has added to some uncertainty and contributed to the price drop. But with XRP, it's different. It's the only coin with regulatory clarity because of the legal battle.
We've really paid the price for that.
Yeah, that cost us a lot of performance. Now we'll just have to wait and see how things play out. I have to check it weekly.
We're skipping Bitcoin dominance again today. Nothing's changed there. Just like you said with the derivatives and ranking, doesn't look like Bitcoin's handing over the reins anytime soon. At least not yet.
Long sideways movement, not much going on. Up 1% sometimes, down 1% other times, but that's it.
We're looking at the colorful schedule. You haven't made many changes today.
Yes, we've kept it for completeness. I changed the date, updated it to the 13th, first Tuesday last week for NASDAQ. Sorry, for SSS, and updated for the Dow too. NASDAQ is still a bit behind. I want to highlight again where we are right now. We can check that off the list. We did it. Now it's all about the final stretch. How much higher can we go? This is where we are now, and here's the deal. Heading down. Is there a relief rally or a continuation rally? I'm siding with a continuation rally towards the target. I've taken the green F out of FOMO again because things are calming down at the moment.
Yeah.
Dominance rollover. Like I said, we've already taken the first step down. We're now in a long sideways phase, longer than during the last bull market. Now we're waiting for the big move downward. Yeah, and nothing's really changed down here. Everything's still the same. We need to wait and see how Bitcoin develops, and then they'll follow suit. In the last 6 or 7 days since our last interview, not much has happened to suggest a major move that would be a game changer.
Both options are still on the table.
Both bearish and bullish camps have solid reasons for their views. You just highlighted that you still believe the market will rise, staying bullish. Yet, there are valid points on both sides. Let's dive into the factors and realities that support each direction.
Yes, that's a good point, Joanna. I hope I convey in this interview series that there's a bullish view that might look a certain way, but there are bearish views too. Some think this suggests indecision. Initially, I highlight the possibilities and how they might develop using various indicators. In the second round, I'm leaning towards the bullish option. I know what I'm betting on, even if I may not be right in the end. Right now, I think it'll turn out this way. I keep reminding myself of something interesting. Yes, but it's always been like this in the past. Let's use that as a starting point. There are clear indicators for both bearish and bullish views. Consider the bearish side, SMA 50, which we've discussed in depth. Bullish perspective. Hey, hello. Liquidity is coming into the market, DXY. So for every view, there are clear indicators that say MACD. On a monthly basis, a solid signal. It's always been like this. So if you take this indicator, it'll likely be the same again. Both sides have these indicators. When we hit a clear range, like if Bitcoin sets a new all-time high at 130, 140, or if it drops to 73, 68, 65, 60. Once we hit a point like this, then Johanna, it'll become evident that individual indicators that worked before was off this time. So when Bitcoin hit 140 or 150, we realized the weekly SMA and MACD interpretation was wrong. If we drop straight to 60, it's clear liquidity doesn't matter much in cryptos. And while the DXY fell, it didn't move opposite to Bitcoin. Plus, if gold is doing well, Bitcoin tends to follow later. It's another sign of a bullish outlook, but if we hit 60, well, that just wasn't the case this time. One interesting thing is that some clear indicators may turn out to give false signals. That's why it's key, in my view, not to cling rigidly to indicators, but to stay flexible, open to new ones, and constantly reassess to ensure you're making the right calls.
You have to stay flexible, especially in markets like these, which are quite challenging. As always, our viewers can count on us for all the important information. Oliver, thanks a lot for today's interview. We'll catch up with you on Tuesday, hopefully with some good news. Dear viewers, we're looking at an exciting, trend-setting week ahead. You'll get all the important stuff from us, and we can't wait to see you next Tuesday. Till then.